Hi, I'm Phil Fiegler. I'm an enrolled agent in Oakland, California. My company's called PhilTax. You can learn more about us on our website, www.philtax.com. This video clip is going to be the first in a series of 4 about employee stock options. We're calling this Stock Options and Taxes 1A, and it's going to be about non-qualified or non-statutory stock options. Now, if you're watching all the videos, you can watch them in any order you please. Doesn't matter. Although you may want to take a look at the introductory video, which is sort of a summary of what's it all about and what's going to happen in the 4. So now we're on non-qualified or non-statutory stock options. These are probably the easiest ones to report on your taxes. They tend to be taxable at the point of exercise, which is when you buy the stock, and they are ordinary income, that is wages. They will be subject to all the same taxes the wages are subject to. Your income from these stock options comes from whatever the difference between the fair market value of the stock on the day you exercise and your option cost is. We like to call this the bargain element. The bargain element is what becomes taxable as wages. An interesting fact about NQs is that it's about the only stock option that you do not have to be an employee to receive. A 1099 contractor may receive them as well. So if you're an employee, it's going to be wages, it's going to be in your W-2. If you're an independent contractor, it's going to be 1099 income, and it's going to be in your 1099. If you are an employee and have a W-2, there will be a code V as in victory in box 14 to signify the amount of your income which came from these options. NQs very often, or almost always I would say, tend to be same-day exercise and sale. Just because of your exercising the options, you're buying the stock. And normally the way people get the cash to buy those shares is to also instruct their company to sell the shares. So a same-day exercise and sale occur, then all the federal, state withholding, Social Security, and Medicare will be withheld from your proceeds, and the net amount will be given back to you. So that's how those work. And again, they're ordinary income, wages to the W-2 person, 1099 income to the 1099 person. And your income ends up being your bargain element, which was your discount from the fair market value of the shares. You need to remember that when you do sell your shares, whether that's the same day exercise and sale I referred to a minute ago, or whether it's down the line, you've now made a stock trade, which means you're going to receive a 1099-B as in boy from the brokerage house where your company keeps their stock plan, and that is expected to be reported on your tax return on a form called Schedule D. If you fail to file the Schedule D, you will ultimately end up receiving a correspondence audit from IRS. What is your basis in the shares? This is kind of cool. Your basis in the shares for tax purposes is the amount you actually pay to exercise your option plus the bargain element that they put in your W-2. That's your basis for the shares. So what usually happens in the actual Schedule D trade is because the income from the bargain element was already in your W-2, your basis ends up being the same as what you sold it for. The trade usually ends up being a minimal loss, which is caused by the brokerage commission, but it does need to be reported. Please be aware that while this information is very focused and accurate, it does not cover all possible situations and circumstances. So therefore, please be sure to seek professional advice. Thanks for watching. You can find links to all the videos on our website, www.philtax.com. We hope you enjoyed it and have fun.